long-term trend has been ugly. This year started off, I think the first day was good, and then from there it's just been nope. Although we've kind of been rebounding and stabilizing in the last couple of weeks or so, but here's where we're at. So long-term trend is actually down. We're negative 1.53 is how much it stretched below its moving average. So we're stretched not bad. When that gets over 2-3%, then we're really in a bad market. But we're just kind of negative, but not terrible. But yeah, the long-term trend is not amazing right now. So we're kind of curious to see where this goes. Today, this is actually peaking up a little bit, even with the market down. So I'm slightly optimistic in the short term. And I'll show you why. All right, midterm cycle that we trade our index models on went positive a little while ago. It went negative around mid-month, right before things got really ugly, and I'll show you that in the next chart. But yeah, it got ugly. Money came out of the market very quickly. It was very questionable. I think last time we did this webinar, we were somewhere around there, and we were like, well, optimistic it could turn around, but nope. Money came out. It came out fast, and then it's been coming slowly back, and then now we're positive, even with the last couple of days craziness. So here's where we are. Right here's where we had that sell signal. So we started getting out right there. This all looked pretty normal. We thought this would be continue or move up, and nope, that's where the problems happened. So yeah, our signal said to start playing it safe, so we did. And then we actually right here said to get back in a little bit, and we had a great jump, and then yesterday gave it back, and I'm not exactly sure why we suddenly care more about inflation than we did earlier. But also, as I like to show, is that when volatility is falling, that tends to go with the rising market. So we had a rising volatility into near the end of the month, and then really since the 1st of February, volatility has been falling. So I kind of expect if this continues, we should have a stable or an upward moving market in the near term. Where that goes after that, I'm not sure. It really depends on what the Fed does with its interest rate raises. I think they're a little bit behind, and they have a lot more to do than they are admitting, and inflation's getting out of hand. So, we'll see. It's kind of up in their court now to see where they want to take it, but that's where we're sitting. Sectors. Through that whole downturn, only one sector remained positive, and that was energy, and that actually went negative yesterday, which is interesting on a short term, but it's still, money flow is still positive, and it's on this side of the chart, so that's positive. Yesterday, basic materials, that XLB, that popped over here. So this list is building, and that's something I'm a little bit positive about in the short term, because as more sectors become positive, more strength is in the market and can all move up together. So we're still, we've got early warning signs that industrials might be going okay. Consumer discretionary is doing okay. Healthcare maybe, real estate a little bit. So there's signs of hope over here, but we'll see. They need to be shifted over here before we're really feeling good about where things are in the market. So that's where we're going here. This is something we watch closely because this corresponds with recessionary environments, and we could be pushing into one. Usually when this is rising, we're in going into recession, much like in that 08 situation. And then in 2020, it just took off with the COVID crash, and then it's coming back. But we're now getting a little nub up right here. So that's something we're watching. I want to see where it goes from here. But if employment starts to rise, that could be negative big picture for the market. We could see some very, very uglier sell-offs than what we've seen. Because even though January was bad, it wasn't terrible, unless you were in small cap, which just it was terrible. And then finally, we've got the advanced decline. Well, it's not advanced decline. It's the new highs, new lows. And this is something usually when things are fine, we'll see more highs than lows in the market. And that kind of corresponds with the rising market. Even when it's questionable, it kind of comes back. But right now, it's not amazing. We've gotten negative days, day after day. It tried to stop at the beginning of February, and that got worse. But again, if we're seeing money come into some sectors, we could see sector strength build, and the market could rebound pretty well from there.